All right. Welcome to the Money Show, as I call it, where we discuss all things money. I like to hear about people's stories of investing, their relationship with money, um, and yeah, let's literally have a conversation about what your journey has been so far, and how I can help.
Okay, so I have been a serial saver since I could remember, and like I always knew it wasn't the best way to use my money, but
Yeah.
I always anticipated buying a house. So I was like, okay, I'll save and spend it on a house one day anyway, so it's fine, even if I haven't got a short-term plan for this whilst I save. Eventually, it will go into a house, so it's all good. So that didn't happen the way I thought it would. So I found myself with a pot of savings that I haven't spent. And now I'm just like, okay, I don't have a short-term plan or a medium-term plan for this, really. I have a long-term plan, but also that could change too. So my point is like in the meantime, I need to invest. So I tried to invest some money like 2 years ago, I think.
Yeah.
And I work in, this is kind of embarrassing actually, because I work in banking. So I should know how to do certain
No,
things.
but do you know why I like this conversation?
Hmm.
That is a lot of people's story,
Is it?
right? Your story is a lot of people. So it's not embarrassing.
Okay.
It's
Well,
actually a very real reality.
yeah.
There are a lot, I know this because I've got clients who have come to me and said, I work in equity research. My job is literally to research stocks for big clients, but I've had imposter syndrome when it comes to doing it for myself, right? And
Mm,
and and this is why SPA's got this motto, investing is for everyone.
mm,
And even myself, it was only 6, 7 years into my career when I was forced to move my pension from Goldman Sachs to Hargreaves Lansdown. Because once you leave, you're not allowed to leave your pension with whoever they use to manage it.
mhm,
That I even learned what a SIP was, what a
mm,
stocks and shares ISA was,
mm.
and started actively managing my savings in that way. So it's great that you're telling this story because there is someone out there that is literally watching this thinking, that's me. It's
Yeah.
gonna watch it. Obviously, we're live now, but yeah, tell me more.
That just reminded me, I left my job in April,
Okay,
and I got a letter saying I need to decide in the next 12 months what to do with my pensions. I even forgot that I
okay,
used to have that to deal with. But yeah,
exactly.
basically, right now I've put my money into a savings account, and yeah, it's just not working. It's
I want to
working, but
stop you.
huh?
I want to stop you again.
Okay, go on.
So I was actually going to ask you, have you got something lined up? Do you know what you're doing next, career-wise?
In terms of what, my job or?
Yeah, you said you left your job.
Oh yeah, yeah.
Have you
Hmm.
got a next job lined up, or are you still actually job hunting?
No, so I left my job, but I went into another job straight away. So I didn't like leave
Okay,
without something.
all right.
So I'm
Yeah, I
kind of,
can't listen to something like that and not just check that you're okay because
yeah.
there are a number of things we also do at SPA. So supporting people with their careers is very, very important
Hmm.
because that's critical to your wealth building journey. And if you're an entrepreneur, supporting businesses is also critical to your wealth building journey. So the community does support those two things. In fact, I've launched a platform called with my co-founder called Coach Cube. And this is literally mentoring people at all stages of their career. And even there are people on there who are mentors and also mentees. So you might be mentoring grads to get into entry level roles, but also be a mentee to someone that's helping you get from wherever you are in your career to somewhere else, a bit higher up or in a different industry and so on and so forth. So we always do that. So that's why I wanted to stop you just have that little conversation there, just to make sure you're all right. But like you said, you went straight into another job. We thank God. That's wonderful. Yeah, tell me more. Sorry.
Okay, so I'm working, and the type of work I'm doing is contracting. So I don't have a pension anymore. I don't have anything. I have to do it all myself. So I have to budget and save and all the rest of it myself. And yeah, I just basically feel like the way I'm doing things now, I know isn't the best, and I want to change it. So, like I mentioned earlier, I did try to invest a few years, maybe 2 years ago, and I knew I wanted to do something that was going to be. I wanted to invest in a fund that was going to be global. It was going to be not really UK based, and that's kind of all I knew. And I found a fund that I liked the sound of, but to actually go and do it, so I opened a Fidelity account and I placed some money in there, and I tried to look
Okay.
for the fund that I found online, but I couldn't find it on there. So I was like, what do I do now? Like now, where do I find it? So I think so. I left the money in there for ages, and I realized that's also stupid. Let me take it out and put it somewhere else. But I want to place the money somewhere that I'm comfortable, and I know at least I'm the risk is one I'm willing to take, and yeah, it makes sense for me. But I just don't know how to actually execute it.
Okay. So you found the fund somewhere else?
Yeah, so I went on Google, which I don't know if is the best thing, but I went on Google, I researched some funds, and I liked the sound of one particular fund. And then
Okay.
I assumed that I could just open a fertility account and find the fund in their list of options, but it wasn't there.
Okay. This actually leads on to another big point when it comes to how to choose an investing platform. The two things I care about the most personally are number one, availability of stocks and funds. Nothing worse than actually finding a stock or fund that you want to buy and it's not on the platform. So that for me is number one. Number two is actually execution. And what that means is that when you actually buy, sometimes you get left on pending. You get left on red, right? You want the two blue ticks. So you need a platform that when you hit buy, it actually goes through. It's actually one of the reasons why I use Hargreaves Lansdown, even though I don't like the graphics, I don't like the user experience. But in terms of making money, the two things I care about the most, they're number one. Um, so worst case, if you ever get stuck, you go into the Telegram group and you literally put the fund in there and you say, guys, I'm struggling to find this on any platform. Does anyone know what platform this is on? And we'll find it. In fact, this is something that even I use the group for. But sometimes I can't find this. It's not on Hargreaves Lansdown, but it'll somehow be on Trading 212. And it should be the other way around. But that tends to happen with some of the penny stocks, not actually some of the big funds that are out there. So yeah, definitely another way to use the Telegram group because there's a wealth of knowledge in there, and there's some people that just know how to find things. That's their special talent. They literally know how to find things. So definitely leverage a group in that way. All right. Tell me more. So
Um,
you're a serial saver, you're a serial hoarder of cash. And one thing I say to people is inflation is the like when inflation was 10%, if it stayed at 10% for a whole year, if you've got £10,000 in the bank, whatever you can buy for £10,000 today, you can only buy £9,000 worth of that in a year's time because everything around gets expensive. And interest rates play a big part to that when they start to rise as well. Because now what happens is not only is inflation killing you, but the high inflation, the high interest rates are killing businesses, which make them even up their prices even more. And in a way, it helps you as a saver because you go from zero pretty much to maybe 1% or 2%. But one of the biggest things that recently I've started really preaching a lot of, a bit more on, because I think initially I just dived into the stock picking without actually realizing that there's some people who may not be ready for stock picking yet in terms of their mindset, in terms of their desire in, to learn or to actually get involved. But If you're a saver, there is actually a way to use the stock market as a high interest savings account, which is just having a direct debit set up into a ready-made portfolio, a specific type of ready-made portfolio that actually consists of the biggest 500 stocks in America. And that's what you might have heard before as the S&P 500. But
Mm-hmm.
that's what it is. It's a ready-made portfolio that someone has put together, that's standardized. Everyone around the world knows what this is. It is the most important stock index in the world and was probably the first one. So it's like, it is the benchmark. If the S&P 500 drops in value, most other stock indices around the world are likely to drop in value following it. So it kind of is the barometer for the market. So if you have regular investing set up in Hargreaves Lansdown, which you can do for as little as £25 a month, you don't actually pay commission on that £25 a month that goes into that. So you can actually set that up. So even though you were a saver, the past 10 years, doing that into the S&P 500 would have got you an average equivalent to 14% a year. Now, even with 10% inflation for a period of time, you're still going to be earning 4%
Yeah.
on your cash,
Mm.
right? Because it's going into this thing that's gradually moving. So it's so important that whilst you figure out whether you want to buy a house, invest in crypto, do individual stock picking, maybe do a bit of angel investing, there are products out there that can guarantee you a return. In fact, currently, you've heard of Telegram.
I actually haven't heard Telegram, no.
Oh, wow. So Telegram is literally a new type of WhatsApp
Okay.
that is really, really, I'd say it's better than WhatsApp in terms of the type of things you can do on there. But it's a messaging app.
Mm-hmm.
But if you join my group today, which actually sits in Telegram, you can literally see the chat history from when the chat began in 2020. You can't do that on WhatsApp.
Okay.
You can also have way more people in the group. You can send files quite easily. It's WhatsApp is actually catching up to Telegram. So I'm seeing WhatsApp now start adding features that were already on Telegram.
Okay.
Now, Telegram itself has they're trying to do an IPO in the next couple of years.
Mm.
And there's a play right now where you could actually lend Telegram money
Mm-hmm.
and earn 7% for 3 years and then get access to an allocation of shares. They turn into shares in 3 years' time if you want.
Okay.
That will then get involved in the IPO. So this is on the other extreme end of what I do with the angel investing lot and people that are trying to get into businesses like Revolut, private businesses before they get to IPO stage. So we have a whole angel investing in companies that we know, and then in black owned businesses that might still be in a very early startup phase. So there's a whole spectrum of them. So that's another thing that people can do with their money. Sometimes it is just investing directly to own a
Mhm.
share, and
Yeah.
sometimes it is actually a loan that turns into shares later on.
Okay.
It's called like a convertible bond, a bond that converts into equities, into shares. So I just thought to throw that in as well, just because the conversation went that way. Um, I, I, so you have an idea of the other type of things that we can do with excess capital. I wouldn't advise people to do that with their first bit of capital.
Yeah.
So I've got this process where I'm like, okay, cool. You earn an income, a portion of that income goes towards savings. A percentage of those savings goes towards some emergency fund, so it stays as cash. The other percentage goes towards investing. Now, whether that's property, whether that's passive investing into S&P 500, or whether that is active investing, creating an individual stock portfolio
Mhm.
that's long term, that bit of cash is for investing. And it's money that you don't even want to touch in the next 5 to 10 years. You just
Yeah.
want to let it build in the background, which is why you still got your emergency cash and you live off the rest of the disposable income after that.
Yeah.
Let's say you're putting 40% of your income into your savings pot. The other 60% is for spending and for paying bills and so on and so forth.
Yeah.
So that's a clear procedure. So let's say now on your index fund investing, that's doing okay. Then your long-term stocks portfolio has created you some profits. Then you take a bit of your profits and you say, this is a capital that's for riskier things like meme coins or riskier crypto or for angel investing. Because if it doesn't go to plan, you're still your profits are still protected because it came from a place of profit.
Right.
And
Right.
then we then increase the chances of those things going to plan by actually having strategies around them to increase the chance that it's not just going to go to waste as well. So when you think of things like this from a procedure and a process point of view, then holistically you are maximizing your probability or your chance to consistently just build a return on whatever you do, and you're minimizing your chance of making a loss. And everything I do from a strategy perspective is from a place of chance rather than making money or losing money. It's am I making decisions that increase the chances of me making money and reduce the chances of me losing money? That's decision making. And if you make good decisions over and over and over again, eventually all the output from your good decisions will outweigh the ones from that might have been good decisions but lost you money or lost you a return. And I believe that wholeheartedly over the long run, that's how you build wealth.
Okay. So I want to go. So like, I just want to know, how do I execute everything? Because
Okay.
to be honest, nothing is completely brand new. I've looked into some, like the angel investing you mentioned. I've come across other platforms that do similar things. So I've always just needed, I guess I just needed to know. At the time, I was a bit nervous. I was a lot younger, but now it's more, I know that I'm not using my money well. I'm not making it work for me. So I just want to execute. I want to just get the ball rolling now.
Okay. So from a stocks perspective, the best thing to do is to decide what amount of capital you want to allocate to passive investing, S&P 500,
Okay.
set that up to happen regardless.
Okay.
If you need help doing that, that's free. That's, open a hl.co.uk account, um, click on regular investing. If you get stuck, worst case, call them up and let them know what you're trying to do. S&P 500 accumulated. So accumulated is some of the companies there will pay dividends,
Mm-hmm.
and those dividends will just be used to buy some more shares. And then the other one is distributed, where you'll actually get the dividends paid into you as cash in your HR account that you can then do whatever you want with. So with the passive dollar cost averaging, as I call it, I always advise people to do the accumulated, because
Yeah.
it just makes sense.
Mm-hmm.
Now, on the active side, what we're trying to do there is target 15 to 20%, which is outperforming the passive investing by actually putting a bit more thought into it. And on that note, I'll show you very quickly the SPA watch list. So I built a real-time watch list on Google Sheets,
Mm-hmm.
and that enables everyone in the community to subscribe £20 a month, have access to this watch list in such a way where we're all singing from the same hymn sheet. So I'll show you what that looks like.
Okay.
Right. So this is the SPA watch list. You might have seen screenshots of this or clips of this. And I always show the first three cryptos, and then some ETFs and some REITs, the prices of them, which are real time. And then here I've got long-term buy alerts for some of them that are quite obvious. I'll only put in a target entry if it makes sense, according to my system. And you can see here their buy alerts, their sell alerts. Um, and yeah, this is session 3 of the course is basically going through every single column here
Mm-hmm.
and letting you know why it exists, why I put it in there, and how I use it. And the
Okay.
top row has lots of interesting websites and links that you can use as part of your investing journey. Pre-market screener, stock screener, FTSE index review. If you want to see directors buying stock, short interest. So this is hedge funds that are actually betting against certain companies, being able to know that that risk exists on a stock or fund before you actually get into it, um, and so on and so forth. So ultimately, what my course is doing is it's teaching you how to build a long-term portfolio
Mm-hmm.
using alerts, long-term buy alerts that I've set using my model,
Okay.
right? Um, and then I do have a free collaboration I did with Finamize up here, where I gave them a lesson on how to invest only in ETFs.
Okay.
So yeah, that's always here on the watch list for you to watch whenever you want to. I can send you that link as well. Send the link in my bio as well. So that's just a free lesson out there. Also included on the e-course at the end. Um, so yeah, the e-course basically teaches you how to drive rather than teaching you how to be a mechanic. I'm not teaching you how to create this whole watch list and how to create everything that I've done. What I'm saying is I'm going to teach you how to learn the strategy that I've created. So I'm just teaching you how to drive, which is why I can teach it to you in 8 hours rather than for you to do a whole master's and CFA and all those kind of things. And I found that some of my clients, especially the ones that worked in banking, who weren't doing so well, have actually learned my system. And it's like a eureka moment for them. This makes sense. Because a lot of this stuff you won't get taught in banking. You even may not even get taught on the trading floor. Because on the trading floor, you're a market maker. So it was only me working in a hedge fund, a quantitative hedge fund, where you're building bots, algorithms to run portfolios that I was able to find the last cog in a wheel. I've now simplified into a system that makes sense to give back to a retail person. And what this is teaching you is decision making. So you and me may buy two completely different stocks, but we're using exactly the same process, the same decision making, right?
Okay.
And then in terms of personal management, in terms of how do you track your investments, I've built this second sheet that everyone gets in session 4 of the course, which has a strategy clearly written out for you. So all you ever need to do, right, is whenever you buy a stock,
Mm-hmm.
before you've even bought the stock, you would have filled in one of these, which lets you know all the different scenarios that could happen, how much capital you would add to a stock if the price was to drop by a certain amount, what that new average price will look like. So let's say, for example, let me give you a really short, quick example. Right, let's say, for example, Boohoo,
Yeah.
pretty little thing,
Mm-hmm.
right? If I show you the chart for Boohoo on Google over a 5-year period, it's close to the lowest level. In fact, today is the lowest levels ever been in history.
Mm-hmm.
In history, right? So let's say you were to buy Boohoo today. By the
Right.
way, S we were selling at 400 and 300 up there, and we never bought back until recently,
Okay.
right?
Yeah.
So what you would do is you'd only need to. I've built the spreadsheet in such a way. Let's say you had a £5,000 in your ISA or
Mm-hmm.
SIP or whatever,
Mm-hmm.
and I've already set that that's £1,000 per stock. And the way you spend that budget, let's say I put in, all you need to do is put in the ticker, BOO, and the price you're going to buy, let's call it 30 pence. And notice over here, I've already split out the budget, 300, 300, 400.
Okay.
It could be 500, 500. It could be 400, 300, 300. It could be 600, 400. There are many ways to split out the budget. But for this specific example, let's assume I've split it out like this. All you ever need to do on your sheet is to put in your ticker and the price.
Okay.
And you see that this model just updates.
Okay.
And what this does for you is it lets you know that if you split out the budget like this
Mhm.
and you only buy some more boohoo if the price dropped to 15, and again if the price dropped to 7.5, a drop from 30 to 7.5 is big. It's like
Mhm.
70%,
Yeah.
60%, right?
Mhm.
However, if you would need the price to go up for 400%, 350% to break even if you didn't split out the budget like this. So if you spent 1,000 in one go because the
Oh,
price is a record low and it
yeah.
looks like it makes sense, this can still happen. And now you got no more money
Right.
other than going into your current account. And you should never really do that because that wasn't money that you initially planned when you got in at spending your budget in one go, right? You're now cheating. You're cheating out of income that you could be spending on holiday rather than the pre-allocated budget for your investing journey. And
Mhm.
this is where people get into trouble, right? Because if you had spent 1,000 at this price that looks like the lowest price in history, it looks like a good investment.
Yeah.
But you still need to respect markets and say, do you know what? Price could still drop another 50%. And if that happens, what's my plan then?
Okay.
Right?
Mhm.
So we're very cautious in the approach that we use when we're picking stocks. And this will tell you that your break-even price, if this event happened, is 12. So
So
if you
just
use
to
this,
understand, if I was
yeah,
to buy at 30, 15,
yeah,
and 7.5,
these amounts,
these amount at those amounts, then if I wanted to just sell everything,
yeah,
I'd need the price to go up to 12 pence to break
for you
even.
to break even, yeah,
Okay.
which is only 50% away.
Versus me buying everything at 30 pence. Okay, makes
And
sense.
then now you need it to quadruple in price for you to break even.
Yeah, makes sense. How do you
So
decide how do you decide how much shares to buy and at what price to buy them at? Because obviously I know you have the watch list, I
yeah,
know you have the Telegram, I know obviously you can sort of like do your own research and stuff like that. But do
that's a
you
great question.
okay. You know
And
what I'm
I'll tell you why that's a good question.
mhm.
Because the answer to that question is actually the bit you outsource to me. That's the experience, that's the modeling, that's the that's the bit you can't really teach. But over time of doing this, there's a specific period of time where you will get to a level of experience where you can kind of get it a bit more. You'll still have conversations with me. We might even debate now. You might get to a point where we're both debating, right? But initially, to get started now, a little bit of trust has to rely on trusting that strategy works. But because on the course I'm teaching you the concepts behind it, I'm saying, look, this is at a record low, historical low, and I'm still telling you not to spend that whole
Yeah,
allocated budget in one go. You actually see that as caution. You would actually respect that that's a cautious approach. Now, the levels below that, I'm saying this stock has to go 50% lower than the level it's ever been at for you to even think about spending a bit more of your budget. Now, this is something that a lot of people can, okay, that makes sense. I can live with that. That's not crazily spending £1,000 at a high saying it's a great company, it will come back. It's
Mm.
actually cautious.
Yeah.
Some people think my strategy is too cautious. However, I understand that the objective here, let's say you had £5,000.
Mm-hmm.
20% of £5,000 is a grand,
Mm.
right? If this scenario happens, in a year, you're trying to make a grand or 5K. That's 20%. But
Mm.
I know that if you can average 20% each year, you'll quadruple your money. Sorry, you will double your money every 4 years. And that's the objective here.
Mm.
Index funds, it doubles your money every 7 years, right? At 10%, you double your money every 7.2 years. At 18%, you double your money every 4 years. So I know that to make that 1K, you don't need to, you can actually be cautious. Let's say that Boohoo does make you 50% and it gets back to 18 after it gets to 12 or whatever.
Mm-hmm.
That's £500. That's already half of your target in one stock with even 4K cash untouched. So you can understand where when you've actually picked out 4 stocks and you've done your first transaction, your entire portfolio might only have 1.2K actually invested with 3.6K just lying on the side. And if all of that, you're able to even double that, you've already hit your target. If some of them hit your trade 2, 1 or 2 of them hit your trade 3, and then maybe one breaks even, the other one actually makes 80% profit, the other one makes another 50%. Actually, you can do more than 20% in a year. And to put things in perspective, in 2020, most people at least doubled their portfolio in that one year. Maybe 90% of the group doubled their portfolio, which is like 4 years worth of returns in 10 months. That's the kind of returns we're seeing. Markets have adjusted again, so it is back to the trying to make your 20% in a year. But in terms of the strategy, it works. It's the only thing that makes sense to do. And it's the only thing that's not written in all the books. Most of the books won't go into the transaction strategy. They will only focus on how you pick a great stock and risk management of selling when you're losing X amount. They actually don't really understand risk management and pre-budgeting and the levels in which you get in next. That's my model. That's my experience. I will look at technical analysis. And there is a bit of the course that does go into technical analysis and lets you know how I use technical analysis to to decide when to buy and to buy some more. But everything you learn on the course are all little cogs that go into my model. The model then decides, do you know what? If these are the 15 different inputs are important, maybe only 5 of these are important for this specific stock. Well, maybe all of them are important for another stock. And then the other thing is the combination of stocks. Like if you buy Boohoo, you can't buy ASOS. So
Right.
knowing because they're both correlated, they're both going to move in the same direction. So it's like doubling your money in Boohoo.
Mm.
So understanding the combination of the stocks that it's like you're hiring for a team. You're not just going to keep hiring the same type of person.
Mm.
Sometimes you might hire somebody the same, similar, but in a different, from a different background.
Mm-hmm.
Sometimes you might hire someone completely different to all the other members of the team. Sometimes you might hire a good fit for the team, and sometimes you might hire a maverick because you just want that maverick to come in and disrupt a little bit, to disrupt the thought process so that there's 2 different types of. So decision making is the real value, right? So one of the big, well, the biggest thing in SPA is don't buy anything without paying, right? And what that enables me to do is just to double check that that's 7.5, maybe 5 is better. So the model will give you your default model,
Mm-hmm.
but before you buy, I will always do some tweaks because someone buying Boohoo today is different to somebody who bought Boohoo 6 months ago,
Mm-hmm.
right? But I know that the more it drops, you will all normalize back to the same average price. Someone that buys 500 at 50 and another 500 at 20 could have the same average price as someone who spends 300 at 90, 300 at 10, and another 400 at 5. Do you understand? So like the model adjusts to the person, to the current market conditions, and to the current price. So it's case by case as well, even with the same stock. The only things that are changing is the sizes that you put in and the prices you put those sizes in at. It's mathematical ultimately. And the key thing is I know that the more a price of a stock drops, the more it starts to obey the law of physics more than it does economics or finances or whatever. It literally turns into an object falling through the sky and bouncing off a certain level, gravity. But yeah, maybe that's too philosophical. But
Yeah.
yeah, like
But
once
yeah.
price gets closer and closer to zero, you have
Mhm.
to ask your question, is this stock going bankrupt or not? If the stock isn't going bankrupt, then there will be a price where there'll be a strong bounce. And if
Mhm.
your average price is close enough to that price, your probability of breaking even becomes extremely high. That's like the some of the theory behind the strategy, and the top hedge funds in the world actually model price the same way they model noise or smoke particles. They model prices on randomness. And that's why they will make money regardless of the economic conditions, because that's how they build the algos into robots. And that's why those hedge funds, they just continue making their 30, 20% every single year, regardless, because they've sussed this stuff to a level that you can't even imagine. They've got ex MIT, ex Harvard professors building these models. So they're way ahead of the curve.
Yeah.
And what I've done is I've taken the key concepts from all the different places I've worked at. So working in a quantitative algo environment, working in Goldman, working at in a treasury environment, how to manage cash, and then working at in a Jewish portfolio management type of institution, seeing the four different ways of making a return on capital, taking the best bits, incorporating them into a strategy that's not day trading now, that is long term and slow. So things within my career are decisions I've had to make within 5 minutes or 20 minutes. I'm now making within 5 months and 20 weeks. So you can imagine, like in my world, it feels so slow, so simple because I had to make these same decisions in far less time in the past. And now I've got 5 months to think because it's a stocks and shares ISA. It's not the London Stock Exchange where I'm trading futures. So this is something I can bring back to the people, simplify, and
Mhm.
use to create that SPA strategy that we all use. And then where we have an edge over robots is that we've got a group chat full of experts, where Rolls-Royce, a massive FTSE 100 big company, decides that they're having a rights issue, and people don't even know what a rights issue is because they bought Rolls-Royce because it's a great company. And I have to break down to them what a rights issue is and let them know that this is something that might obey a whole different set of laws, in which case this is a high probability of making money if you can get a price significantly lower than the terms of the rights issue. So sometimes the stock market will give you a cheaper price than even the structural change that's happening in the business. So we did this with Rolls-Royce, we've done it with Aston Martin, and this is where people were able to make 200% on a stock, 150% on a stock. But these are rare events. They shouldn't be relied upon as your main way to make money in stocks. But when they do come, we're ready. And there are people in the group that we can all have that discussion just to make sure we've thought about it right, double check, and then we put it out there as a potential play. Because one thing we won't do is tell you to buy a stock and sell a stock. What we'll do is say, look, here are some interesting opportunities. This is what I am doing, and this is why. Because just because I'm buying it doesn't mean you should buy it, because it might be right for me because I'm coming from a place of profit, got a bit more play money. It might be wrong for you because it's your first ever investment and it's a penny stock and it's not a FTSE 100. but sometimes you do get some crossovers like a FTSE 100 stock, a safe stock that might actually behave like a penny stock. But because it's a big company, well known, well established with a moat, you actually have an opportunity to get involved in something like that. We're talking about stuff like the Teslas, we're talking about stuff like Apple, which has doubled over the past, what, 2 years, you know, companies you probably even know yourself, Snapchat. So it's just being in the room where you can have these discussions and having someone to hold your hand along the way so that you make good decisions. So this isn't like a route to become financially free, even though that may happen 20, 30 years down the line. This is actually saying my cash is in the bank doing nothing, earning 1%. Is there a way I can make more passively? And then is there a way I can actually do even better actively? And how do I come across and do that? You do the SPA course. It costs the same amount it costs to learn to drive. And we all know the kind of investments we put into our motor vehicles and the car finance and the insurance and the petrol on an asset that's depreciating. And it's like, okay, if we're prepared to do that on driving because we value driving, why can't we use some of the same energy? Because at the start of the call, you did mention saving blindly almost for property. That's
Mhm.
because you've got confidence in the property market and you know that you are going to buy a house. And I'm just trying to get us to the level where we can do the same thing with the stock market, where we just know that this thing is going to make us money and we're even saving without, like, we're just saving blindly towards it, knowing that once we hit a certain number, it's just going to go like that. And it takes time because our parents didn't do it. Well, a lot of our parents didn't do it. So we're the first generation giving this thing a go. But when we start having kids and stuff like that, they're the ones that are really going to clean up. Because you're talking to your kid about their investments they've got on some index when they're 10 and 11. When they go to school, they're going to know this stuff. It might even influence them to get into finance or become traders, or because they've already started hearing about this index fund that their mum has set up for them. And by the time they get to uni age 21, 25, and they got like what, six figures just sitting there, they're
Mm.
going to go into careers a bit more confident. If they need to resign from a job, they'll resign from a job without thinking, oh, I need to pay the bills.
Yeah, I have a question.
Yep.
The course, so I'm assuming you'll send me the details for the course, right?
Yeah,
After.
yeah. Yeah, I'll send you those details.
Okay. A question I have is how many people are in the group in Telegram?
Oof, couple thousand.
So how often would I speak to you?
Okay, so that's the free group. The free
Okay.
group is the group where everyone is at, all kinds of conversations happen. If you've got a business, it's free advertising on the weekends. However, for people who do the course, there's a paid group, and that paid group is £20 a month. They give you access to the SPA watch list, which I just showed you,
Mhm.
and access to me within that group. So that's my bread and butter. That's where I stay. And that's only for people who've done the course. So that's a bit like the classroom.
So if I have a
But
question, how long would it take for me to get an answer?
you can get one straight away.
Okay. I'm just
Yeah,
wondering.
that is literally my, if you want to find me, sometimes you can find me in there and they can't find me in the big group. So I'm just spending my time in a smaller group
So how
that
how
people
small
pay
is the
for.
smaller group, the paid group? How small is it?
It's much smaller than the bigger group. I can't say the number here because
Mhm.
people will start multiplying it by £20 and doing some calculations on my pocket. But yeah, it's very, the culture in there is even very different. It's quieter. It's because once you put your investments on, right? And
Mhm.
we also have a group Zoom meeting once a month as well. So you might put your investments on, but then you get to see what everyone else is doing with the same strategy, and you get to see where everyone else is selling, and you get to see even we'll discuss the strategy can be used on crypto as well. So like especially the tier one Bitcoin, Litecoin, coin, Ethereum, we get to see the strategy working on these as well. Um, so yeah, like in terms of that, you get access to me. if you ask a question, what tends to happen is other people might even help to answer that question as well if it's been answered already. Like if someone asks what's the best platform to use, you'll get a range of answers. You'll get beginners answering saying, listen, I just started 5 months ago and found this one easier for me to do X, Y, and Z. And I might come in later on and say, I agree with that. I just happen to use this one because I just got used to it. It was the first platform I knew. These are the things I care about. So it's networking as well. Like you get to, build little relationships with people within the group who maybe been there longer, who were also beginners when they started. Um, so yeah, you have
So,
access to me. There is a one-to-one service,
mhm.
right? Which is more expensive. It's £200 a month. And this is where you can call me whenever you want. You can DM me whenever you want. Get access to WhatsApp group as well. Um, but with this service, I tend to try and make sure you absolutely need it. Um, because if I feel like you got the personality where the group is sufficient, then it's like I don't think you need a one-to-one. However, if I feel like, do you know what, from the person that from what I've gauged from you, I feel like you need it, then we'll do it. But I don't want people to just say they want one-to-one because they feel like they need one-to-one, but actually you don't until you've actually experienced a group for 1 or 2 months, and then you say, oh, do you know what? I do need a one-to-one. Does that make sense?
Yeah, so it sounds like all in all, SPA, it really is geared towards, I mean, the passive investing is simple.
Yeah,
It's
yeah. You don't need to pay for any of my service to
yeah, it
set up
sounds
the
like
passive.
yeah, it sounds like active investing is really where you guys step in and help people. I want to know as well, like how often do you like if I was to decide to do active investing,
Yeah.
mainly picking my own stocks and things like that, would I have to check this every day, like the spreadsheet, for example? Have I got to check it
No,
every day, check my
no.
stocks every single day? Because at the same time, I don't want to like have to sit at my house and make sure that I'm constantly checking um
Let me show
to
you something.
on.
So in this sheet, you get a live portfolio, right?
Yeah.
One of the things I set up is your target entries for when you need to buy more
Hmm.
using this system or when you need to take profit. And once you put those numbers in there, and this is what I do for my busiest of clients, what you get over here, you see this trade alert,
Hmm.
this will let you know when there's action you need to take. After you bought your stocks, you're going to fill this out with the next level price that you need to buy or the price that you're looking to exit. And because this sheet is real time, these are live prices that are moving.
Hmm.
If at any one point in the day, the current price falls below one of your target entries to buy more,
Hmm.
this will turn yellow.
Okay.
So then the only check you will ever need to do in a day is to open this sheet up, which you can actually have as an app on your phone. So the same place you hit Instagram, this sheet can be converted into like an icon on your phone.
Okay.
So you literally need to click it
Hmm.
and just check that there's no yellows.
Okay.
That takes 1 second to do.
Hmm.
But the way we're investing, when I know that some of my clients are busy, there's certain types of stocks I won't even allow you to have. So part of what you're learning on the course is which kind of stocks you can have tailored to fit your lifestyle.
Okay.
So if you're someone that's busy, you would only have a specific type of stock such that if you didn't check your stocks for 2 weeks, if you didn't even do that little check I showed you there for 2 weeks, it's not going to be the end of the world at all because this stock doesn't have that type of behavior. Every stock has a behavior. Some stocks have a high temper, quick temper. Some stocks are calm. Some stocks are introvert. Some are extrovert. Every stock has its own behavior. So based on how busy you are,
Hmm.
you would only have You would only ever take alerts with stocks with the behavior that matches your lifestyle.
Okay. I have another question. I don't want to forget it because I forgot it before. I just remembered it again now. The strategy that you use, does it ever change, or is it like the same and will be the same forever? Or do you ever like, is there any thought about how it
Needs
evolves?
to evolve.
Yeah.
Yeah. Um, I'll tell you this for free. Apart from even your passive strategy, when it comes to active investing, if there's a strategy that just doesn't change, something's wrong.
Mm,
So the only way my strategy changes is it evolves. The same way we're not all using iPhone 4, which was whatever iPhone that comes out today, the latest one feels like this is the best. Don't need ever anything ever better than this. But in 2 years' time, there's another one that comes out. Strategies in investing with the financial markets evolve with time, but it's fine tweaks. Some principles will always stay the same, knowing when to sell, right? But during lockdown, we had to evolve and learn to dance with the pennies. So before lockdown, I never bought penny stocks. I never bought some of these quick wins and all of this kind of stuff. It wasn't, I had my day trading, but I never did that in Hargreaves Lansdown and my SIP. But after one, two, three, four, people in my group were making 10x in one day, and I was to join them. So we had to evolve the strategy to accommodate some of the quicker ways to make money. And people were making day trading money in their SIP and ISAs for a period of time. That period of time passed. Then we had to evolve back to basics. So there's a core, and then the elements that we can tweak to adjust with the times that we're in. We're going into AI world now, right? And this may have an effect on markets. I'm conscious of that now. So when I start to see little changes, then there might be a thing like with no Chinese stocks as a blanket rule. If you already have some, then we will manage them out into a minimized loss or into a, if you're in profit, sell. You know, we have decisions we make once, like, do you know what? No Chinese stocks for a period of time, or no penny stocks for a period of time. You know, these are evolutions that are just minor tweaks to the core strategy, but the core strategy will stay the same. You know, buying massive discounts only, not spending all your budget, knowing when you will buy more,
hmm.
knowing which stocks to avoid,
And this
tailoring the
will
strategy to your lifestyle.
somehow like flow into the watch list or the tracker that we have. It
Yeah.
like anything that is tweaked at that higher level strategy
Okay.
level will flow.
Okay. I feel like the best way to explain this to you, yeah,
Mhm.
is watching the news on TV. You see how TV has evolved
Mhm.
from channels 1 to 5 to Sky
Mhm.
to Netflix, YouTube. People are watching a lot of content on, some people are not even watching TV anymore,
Yeah.
but we're still watching the videos. We're still
Mhm.
watching things,
Mhm.
right? It's a bit like that. So the best way to keep up with changes is SPAs for life. Look at it that way. Having access to investing is actually a team game, especially when you start to get into active investing. You can't just vanish and just go do your own thing. I don't even do that. I've made more money from being in my own group than if I didn't create the group. How about that? Because there's 70,000 stocks in the world. I don't have time to look at everything. People come with ideas. Being in an environment where everyone's always talking investing will make you not miss stuff that you otherwise may have missed if you were just by yourself, right?
Okay. Mhm.
There's been times where I know I would have taken a big loss on this stock if I wasn't in my group when somebody highlighted something to me. And that's me with my 13 years of experience, probably even more if I count uni. So it's a bit like a life thing. The roads change. They're changing the speed limits from 30 to 20 randomly. You wake up and it's 20. But imagine you're in a group where someone says, oh, by the way, that road in Lewisham is now 20 miles an hour.
Yeah.
You might have just zoomed across because you've been doing that for 25 years.
Mm.
So being part of a community is extremely important, right? And I feel like, yes, it's paid, but yes, there's a free community as well. I mean, you take an example of Laura, who is a white lady from 42 years old, delivery driver, saved up to do the course, did the course, saved up some more, eventually built a bit more confidence. 4 or 5K turned into 16, 18K. I think it's one of the testimonials you see on the course anyway. And then that money, she was able to then sell half, spend 9 grand on a holiday caravan home, use the same group to get clients to book her staycation away. Now she's making income from that. That's coming back into her stocks, while she also now has an asset that's income generating that she can spend whenever. Like, these kind of stories is not going to be everyone's stories, but they are examples of how you can leverage communities. And she's still part of the group, you know. 80% of the clients are women. Women
Oh,
like to pay to learn, but women are also good at learning from each other and supporting each other. So there's massive culture of that in the group.
mhm.
Got someone at the door. But
Okay. I need to go back to work anyway. So it's
no, it's
fine.
been a pleasure. Honestly, it's been a pleasure. You've got my details.
Yeah.
So next steps, just drop. I'll send you all the details as I always do, and then
Mhm.
whenever you're ready, you might chill in the group first of all for a couple of weeks or whatever. But everyone has their time to hatch, I call it. But be in the conversation, be in the room. That's the
Okay.
most important thing for me, is that you're there. I'm accessible to you, just to be around.
Okay, perfect. Sounds really good. Thank you so much.
All right, you take care and
All
have a
right.
good weekend.
You too. Bye.
All right, bye.